Good morning, everybody. It's the 8th of November. We are Signal Centre Talking Ball. I'm Joe, joined by Taff this morning. How you doing, Taff?
Hey Joe, good to be back, man.
Yeah, good to have you back.
Mm,
Steve is a little busy this morning. He may join us in a bit, so we'll get going in his absence and cover as much as we can. Again, anybody watching, please feel free to send over any requests of charts that you want us to look at, and we'll do our best to cover them. But in the meantime, we will go through the latest headlines and see what's moving markets today. So let's bring those up. First up, the European investor confidence strengthens. The Eurozone Centix investor confidence index recovered to minus 30.9 from November. For November, from a reading previously of minus 38.3. So still in the minus, but improving, stronger than the forecast. That was a minus 35. In terms of China, the policies remain in focus there. Their policies regarding zero COVID remain under focus, with speculation that restrictions would be eased next year, which would help underpin risk appetite. The euro posted net gains yesterday, was able to take advantage of the US dollar being weaker, with further hopes that an adjustment in China's coronavirus policy would help underpin the global economy. In terms of the UK, substantial UK fiscal tightening in prospect. The latest report suggests that Chancellor Jeremy Hunt was aiming to tighten fiscal policy by around 54 billion in November's autumn statement, which is on the 17th. This was towards the upper expectations, reinforcing recession concerns and the potential for a relatively dovish Bank of England stance, which is why we saw a pretty decent move to the upside in sterling yesterday. So today, really the focus is the midterm elections. Markets will be monitoring the results of the US midterm elections with expectations that the Republicans will regain control of the House. The Senate race is liable to be close, but with the potential for Democrats to lose the upper chamber as well, which would increase concerns over a lame duck presidency. The final Senate outcome may not be known for weeks if mail in votes prove decisive. The Republican control of the Senate and House would increase fears, as I said, over this lame duck presidency. So effectively, Biden being in the House but unable to affect any sort of change or push through any real policies. So that's it for the latest news. I'm going to hand over to Taff, and he is going to
all
run
right.
through commodities and cryptocurrencies for us today.
Yeah. All right. So I'm just gonna kick it off with crude oil. Just share my screen. Yeah, there you go. So I'm gonna kick it off with crude oil. So crude oil for me is really an interesting one because I mentioned this before that the macros on this is really OPEC is really driving what we're seeing right now. You can see that from this time here. In fact, if you look at this downtrend here, we kept having lower lows here with another lower low here, lower low, lower low, lower low. But from here, when we had this drive, this is when OPEC had that meeting. When we had this drive here and price came down, we couldn't even close, we couldn't even match these lows here. So we closed, we had a higher low, in fact. So this is significant for me because this for me this shows that look that the bulls are here and the bulls might be willing to take this even further high. And this just coincides with what I said about OPEC. Just don't fight OPEC because OPEC is the Fed when it comes to oil. So long-term view is bullish on oil. Let's see what happened today. We broke this resistance that we had here. I think it was 89 89.22 somewhere there. We broke it on Friday when NFP came out, and this is where we're playing. So whatever we're playing on an intraday basis would be probably a test of that breakout zone and possibly aiming to go higher. Let's see what it looks like on an intraday basis. So on an intraday basis, yeah. So you can see I drew this trend line, and then we had these higher lows, higher lows, higher lows up until the point when we broke out here. This is NFP. We broke out on Friday here, and we had a corresponding previous swing high here that I put as first resistance at 92.68, or you can put it at 93 if you want. 93, this is the first resistance. So price came up yesterday, we tested that resistance, and we are seeing a retracement from that level there. So what I envisage to happen today is I really I'm looking for price to be capped by the first support, which is your 89.61 to 89.20, 88.61 to 89.22 thereabouts, this zone here. on the bottom side, and then on the upside, I look for price to be kept in this region here, 94.50 to 95.29, thereabouts. It's more of a zone really. So if you're going to be taking any longs, then I would really want price to come here, get liquidity from this support zone here. I think this is the money spot here for any longs, and then possibly if you get good rejection, and then if you can, then put your stop maybe right below these levels here. So my buyers on oil on a macro view on a long term is bullish, and then on intraday again it's coinciding, because sometimes you can have a long term view that is bullish, and then your intraday you can short it and go about it. But then in this instance, I'm long oil on an intraday basis, but looking to only buy at this first support here. Let's see what's happening with gold. Let's see what's happening with gold. Yeah, there we go. All right, so like the other commodities, I think the slump in the dollar when the NFP numbers came out on Friday really boosted, was really a tailwind for the commodities, and you can see this really bullish green candle here that we had on Friday. This is just showing that the momentum that we had with respect to what happened with the dollar. What's interesting, however, with this chart is you can see we had this bottom here, we went up, we had this bottom here, we went up again, and then we had this bottom here and went up. And this is really more like a triple bottom formation for me. And what that signifies is that, look, no matter how much the bears are trying, they just can't seem to overcome this zone here. So there's a lot of demand here on this zone here, and the bulls are really willing to come in and defend that zone. So for me, that's significant. And to look on an intraday basis, okay, let's see what happened yesterday. Yesterday we had this this is like a hanging man looking candle, and we had it on a like this is like a resistance zone, 1660 to 1672, somewhere there. So for me, it tells me that we could probably have a correction, a downward correction today. Let's go to the intraday and see what it looks like. This is what it looks like on an intraday basis. So we had this zone here, and price really could not overcome this resistance cluster here. This is where we're currently trading. I'll be looking for price to maybe go further down, go to the first support 1644 to 1650, get some liquidity here again, and then if we have enough of that, and then probably we could catapult our way up through the first resistance and possibly even go to the second resistance, although I doubt this will happen today. But second resistance is at around 1714, and then my first resistance cluster here is 1672 to about 1679, 1680. So yeah, so I'll be looking for price to be kept on the downside by this support here, 1644 to 1650. I don't envisage price coming to this zone here today unless something really happens and we have some black swan or some news come out on the dollar. But yeah, all things being equal, this is where I envisage price to be capped. And I'm bullish on gold, but then I'm bullish only to buy dips, like deep dips on the first support here. So that's gold. Nat gas is an interesting one as well, because nat gas broke out of a long-term trend line. Let's see on the daily what that looks like. Yep. Previously, I spoke about this trend line here. It's stretching all the way from January really to the start of the year, and then it was tested several times, as you can see here. We tested it here. We tested it in January. We tested it in February. We tested it in around July there, and then here we were testing it, and then we just broke out of it. We just broke out, but then price could not break out of this, could not overcome this previous support zone here. So from here we had the support cluster here, and then with the bulls come in, and then they drove price all the way up. We broke inside the trend line again, but then there's a resistance that we had at 7.16 here. So this is Friday's NFP with this green candle, and then on Monday, on Monday we gapped up, just barely touched resistance. In fact, we really touched the resistance, got rejection, and then we're seeing that rejection now showing. Let's see on the intraday. Yeah, This is what it looks like on an intraday. So Friday, this is Friday, NFP here, good green, 3 green candles here on a 2-hour. And then on Monday, we just gapped up. We touched this resistance. There's enough supply here, as you can see. So price was rejected. And then we're currently seeing this rejection again. We stopped at this trend line again. This is that medium-term trend line. We stopped at this trend line for just a little bit, and then we broke out of it. So what we're seeing now is really price moving to the downside, and we've broken the trend line, and price is possibly targeting the first support, which is around this 6.3 level here, and then we could even go further down to the second support, which is this 6.000 level here. So nat gas is really, for me, on an intraday basis, is looking pretty bearish, and I'll be looking to just sell any rallies that I see. If I get a rally that touches this medium-term trend line, then I'll be looking to sell it. And I think that's my view on nat gas. But on a macro level, because we're obviously getting into winter and you have demand for nat gas, and so on a macro level, I'd think on a medium-term to long-term basis, I'd think nat gas would prices would eventually go up. But here on an intraday basis, this looks pretty bearish for me. So I'll be looking to sell any gains that we see. Let's see what happened to Bitcoin. Bitcoin is another interesting one because it really pulled in traders, and then it seemed to be going up. Right, you can see here, this is that NFP candle that we saw, this good bullish momentum, and you think that this is enough for price to just keep going. This is enough momentum for price to just keep going. But since then, we've had a really, this is capitulation. If you look at it, we've had we traded on Saturday. It was just a small bullish candle, and then from there on Sunday, it was really capitulation. We just kept going down and down and down and down. What's interesting is I drew this. Let's see what it looks like on an intraday. On an intraday, if you look at this is like a higher high here. It looks better on the 4-hour, right? If you look at this is like a higher high here. What's interesting is I was just going through my charts. I was just checking for divergence here, and you can see that despite the chart posting a higher high, you can see that on the RSI here, really we posted a lower high here. So that's just bearish divergence for you, and from there it was just capitulation, and this is what we're seeing now. So this looks pretty bearish for me. We have a cluster of support here from the 19029 to 19300 zone. We seem to have tested it here, probably or almost tested it, but let's go to the 1-hour. Yep, we seem to have tested that zone here, but for me, because of this momentum that we had from here, I'll be bearish. I'll be looking to sell any rallies. So first resistance at 20,000, second resistance at 2460. If price comes up here, if I see rejection, I'm selling it. If price overcomes this, comes to the second resistance, if there's rejection, I'm selling it again. I think this first support will be quite hard for price to go through. So this will be probably my immediate target. If price does go through that, then we have a second support at 18,200, but I doubt this will happen today. I think price is going to play around the second resistance and the first support cluster here. That's it for my end. Over to you, Joe.
Thanks, Taff. Nice spot there with the divergence on Bitcoin. That played out really nicely.
Yeah, it played out really good, man.
Okay, let's take a look at FX then. So starting with the dollar index, and yesterday we saw further selling following on from the selling that was posted on Friday. We have touched the long-term trend line, and today we had a little bit of a look below it, but we are posting green on the candle as things stand so far. It's up by 0.2%. Obviously, promises to be quite a choppy day, depending on what happens with the midterm elections. I mean, we're not going to get the full result maybe for weeks due to these postal votes, but we may get some indication about how things are going to play out. I mean, obviously, if we do get a lame duck presidency, then I can't see that being particularly bullish for the US dollar, and may then see this correct to the downside. So for me, the major levels to watch on the downside are really this swing low from the 27th of October, and also this red line of support that we have at 109.29. So if these levels get taken out, we've also then busted out of the long-term trend line, and then maybe we can start looking for lower prices. Potentially what we have here is some form of top pattern, arguably even a triple or quadruple top. I mean, it's not obviously all in a straight line, but if we break down below this support of 109.53, then I think we do confirm a top pattern and can start looking for lower prices. But for now, it is holding on to that trend line. It is holding above those major supports, so going to side with the bulls just for the time being. Looking at euro US dollar, it's the flip side of what we've just looked at really on the dollar index. So this looks to be forming some sort of bottom pattern, very similar to the top that we just looked at on the dollar index. The key levels here are again that swing high from the 27th of October, which comes in at 100.93. If we can start breaking above that, then for me, we have formed some sort of bottom pattern and we can start looking for higher prices. We've got resistance levels above 102.38, then at 103.40. And if we can get above this level here, the 103.40, then really that does set up a decent looking bottom pattern and we can start looking for much higher prices over the short to medium term. So we saw euro boosted yesterday by the China situation, because obviously they're talking about relaxing their stance on coronavirus, and that really would, I think, open up kind of risk-taking appetite, and therefore the euro should be a beneficiary of that. Let's take a look at cable. So that had a pretty good day yesterday. Although we're talking about these policy changes from the new Chancellor, we did see a break of this trend line, and we're testing the underside of that now, this short-term uptrend line. Posted a really strong session yesterday. There was a gap on the chart, which I looked to trade on the intraday basis on the gun to the head trade. Didn't work out. And we're fast approaching now resistance here between 116.00 to 116.45, which if we can start breaking above, then there's a cluster of resistance levels there and a lot of white space for this to move into on the upside. So that could signify a bottom formation, I think, on cable and could open things up for a decent corrective move higher. And I guess if that does play out, then we're expecting this top pattern to complete on the US dollar as well. We looked at a couple of dollar pairs yesterday. I think the most notable one was dollar CAD, because it was forming a really neat looking head and shoulders top pattern on the daily chart. We've got this neckline here at 135.03. We closed below that on Friday. We closed below it by a few ticks again yesterday. Not really seeing any follow through just yet. But the way that it's hovering around here, it kind of looks like it's waiting to see what the dollar index is going to do and how other currencies are going to react against the US dollar. If this starts to break down, then we're looking for a measured move target on the downside at 130.14. So that would be a pretty decent correction there in the US dollar against the Canadian dollar. Take a look at dollar Swiss. This is kind of shaping up quite nicely as well. We've got a massive level of resistance here at 100.64. We had a look above this level and a substantial close above it last Thursday, but then reversed all of those gains quite sharply to close back within this range. Again, maybe forming some sort of top pattern here. I think the pivotal level here that we need to watch is this low from the 27th of October, which is at 98.41. If we break down there, then I would be looking for a move to the bottom end of this range towards 93.70. And potentially room for a decent correction there as well. Not seeing the same sort of thing just yet on dollar yen. This continues to continues to trade in a very, very strong uptrend. Prices are flattening out a little bit. We are getting a bit of sideways price action here. I think if we can take out the key low that we posted on the 27th at 145.10, then maybe we'll form some sort of small top pattern and we can look for a bit of an unwinding on price here. And ultimately, I'll be looking to target a move down to support at 139.38, and that would potentially provide a bit of relief for anyone that's got any yen exposure, because this has just been obviously relentless now for some time. So wouldn't be surprised if we do see a bit of a correction there. Unless there's any requests on the currency front, let's just check. Then I will move on to the indices and take a look at how they're shaping up, because I am feeling a little bit more bullish about some of these indices. It has to be said. It looks as though a few of them are trying to form some impressive bottom patterns. So this is the DAX, first of all, the DAX 40. First thing I'm looking at here on the daily is the break of this downward trend, and that occurred on the 28th of October. We saw a little bit of a push to the upside, a bit of a pullback, and then a nice reaction higher. So now we're challenging this key swing high that we posted on the 13th of September. If we can get a close above that, then maybe we are forming some sort of bottom pattern and we can start looking for higher prices. And we're seeing this same sort of setup really on all the major European indices. Yeah, Euro Stoxx 50, a similar situation, broken out through downtrend resistance, looks to be forming a neat little bottom. We had a double bottom complete on the break above 34.91 and prices have continued to move higher. The FTSE continues to be the outperformer, although it did give a bit up yesterday, but on Friday had a really strong move higher, coming up just shy of a 78.6% fib level before retreating. But if we look at this, we can see a number of occasions this major support level at 6822 has continued to do a job. Did another job here despite a bit of a fake move lower. That just catapulted prices higher. And this continues to trade in a range, but ultimately on the bullish side of things for now. Looking at the US markets, some signs of bottoming here. It's not as impressive as the European markets, but potential here, I think, on the NASDAQ to form a double bottom pattern. This is what I'm looking at the moment and looking for it to play out. So we've got this first bottom here, which was posted on the 13th of October, and we've potentially got another one forming here from Friday's lows. The key level to watch on the upside is 11,667. If we can break above this, then we will have completed a double bottom pattern and we can start looking for higher prices. The projection of this potential double bottom comes in at around 12,970, which would also roughly line up with this downtrend resistance line. So quite fancy a decent move higher in some of these tech names in the short to medium term. S&P 500 looking a bit more promising, I think, than the NASDAQ. What I was quite interested in yesterday was there was a close above the 10-period exponential moving average, which isn't a foolproof strategy by any means, but for me is often a good sign of a shift in momentum. So we saw that close yesterday. That could trigger further gains in the short term and potentially confirm that we have formed some sort of bottom pattern. The Dow Jones is the leader, really. I know it's only 30 stocks, so it's not the broadest index, but this has had a really strong move to the upside, posting a really nice double bottom pattern that completed back on the move above resistance at 30,475. Let's just get a line drawn on in there to confirm that. So that confirmed a double bottom. We saw a nice breakup, nice pullback, then a big move to the upside. So that was really quite a textbook double bottom playing out there. In terms of the measured move, that suggested upside moves to 32,348. We sailed through that. In fact, got to an extension of that level, the 127 level, where prices seem to have stalled a little bit. But we're coming close to testing this downtrend resistance line. And if we can break above that and take out the swing highs that we posted on Wednesday last week, then I think there is room for further upside in these indices. That's it for me, unless there's anything else that people are wanting to take us to take a look at. Let's just check the stream. Nothing going on there, but thanks for watching, guys, and thanks for your comments. So let's move on now to the gun to the head trade. So this is where the three of us pick trade ideas live on the video in the hope that they play out between now and 9 o'clock this evening. So here are the rules of the game. The ideas are placed at market. They're published to our TradingView profile, which you'll find at signal_center. The trade ideas will expire at 9 p.m. UK time this evening. So let's take a quick look at yesterday's ideas. So I was looking at cable. I identified a bit of a gap on the hourly chart. Obviously, we tend to get gaps on between Sundays and Mondays. We got one there. Typically, when you get a fill of the gap, it can be an opportunity to sell into, to fill the gap and then move back in the direction of where the gap occurred. Didn't work out on this occasion. Pretty strong move higher in cable. So that trade was stopped out. And that's why we have these protective stop losses in place to prevent losses getting out of control. But I was looking for nearly a 5-to-1 return on that one. So obviously going to have a bit of risk attached to it. Steve was selling dollar CAD we saw this big head and shoulders top pattern. He was also looking for a flag to play out to really confirm that. And if we look at how that played out by clicking the play button, we can see that it did continue to move lower and remain under pressure yesterday. And at 9 o'clock, he was slightly onside by 0.54 R on that one, so making just over half an R on his trade yesterday. So 2 new trade ideas coming up today. Taff, I'm assuming you have one ready. You normally a bit more prepared than myself.
All right, so I'm going to play nat gas. I spoke about this medium term trend line here. So price broke it, we gapped up, and then price was rejected by this first resistance, and then from there we're just going down. We halted a bit here, and then we broke it, and then we retested it here. So I'm looking for continuation of this downtrend that we're seeing, and possibly targeting the first support at 6.3. So I will, or the risk reward is not so good, but it's above 2, so that's good enough. So I will sell it at I'll sell it at market at 6.69. My target is 6.305, and then my stop is at 6.858, and my risk to reward ratio is 2.29. So yeah, so selling nat gas at market, see how that goes.
Okay, good luck, Taff. That hasn't given me an awful lot of time to come up with an idea, so just try and fill some space with some slow talking.
Yeah. Talk about the midterm elections.
Talk about the midterm elections. Can you give us a macro rundown on that for us, Taff?
Well, I don't know. Well,
I'm joking. I'm just stalling.
For me, everything is just connected to crude oil, man, and how the US really didn't want higher oil prices as they're going into the midterm elections. But then, look, like I said before, OPEC is always the winner when it comes to these things, because they ultimately determine how much supply is in the market. So yeah, I think Biden lost out there, and things are not looking good for him in terms of maintaining that grip over the Senate and Congress. So I don't know. We'll see how it plays out, but yeah, not looking too good for him. No.
I haven't really followed it, to be honest. I don't know what the expectations are, but obviously, if he is
it's really on the line. Really, it's really on the line. You can't tell where it's gonna go. Really, it's really on the line.
I saw Barack was out helping Biden.
Yeah, the full force, man. Even Trump was out as well.
Yeah.
So
he'll be back, won't he?
Oh, definitely. Trump is coming back. I think probably you announce it maybe before the end of the month.
Yeah.
This is definitely coming back, so
that'll be fun.
Yeah.
Okay, found one. Right. So just really tagging on to Steve's idea yesterday. Well, you say it was Steve's idea. I think I gave him the idea in the first place that this had formed a nice head and shoulders top. So this is the 4-hour chart of dollar CAD. Really neat looking head and shoulders. I don't always like the neat ones because they don't tend to play out. They tend to be too obvious, and then they don't generally work. But I've got to go with it because it's the only thing that's really standing out for me at this moment in time. So it hasn't really confirmed a break yet. It's certainly not convincing enough, but I'm going to sell it at 135.11. I'm going to target a move down to 133.44. Going to have a stop loss at 135.58, giving me a risk reward ratio of 3.5. The measured move is actually all the way down here, but to be honest, that seems a bit crazy going for that today, because that would be a 10.5 R win. I mean, you have got to be in it to win it. You
never know. Yeah, you never know.
But I'm just going to be happy with the 3.5 if that plays out today. So that's my trade idea. We'll get those posted up to TradingView very soon, and anybody who wants to follow the progress of those is more than welcome to. Okay, what's happening for the rest of the day? So obviously US congressional elections is going on throughout the day today. We don't really expect, I don't think, any kind of major headlines to impact markets at the moment. It'd be interesting to see what sort of footfall there are at these elections and who's going out to vote. I guess we'll get some indications about that. But really all eyes on the US Consumer Prices Index, which is due out on Thursday. So that will give us an indication as to where we're at with inflation in the US and what sort of measures the Federal Reserve will need to take in order to combat that. So that's it from us. Hopefully everybody's enjoyed it today, and yeah, please feel free to continue getting involved, post up your comments, and yeah, enjoy the rest of your trading day, guys.
Cheers.
Take care, everyone. Bye-bye.